Good evening and welcome to Nifty BN. Tonight we're covering the latest quarterly earnings from Jagsonpal Pharmaceuticals, which reported a solid 9.7% jump in Q2 profit. Jagsonpal Pharmaceuticals has released its results for the second quarter and first half of fiscal year 26. The first half showed strong momentum, with revenue climbing 10.2% year-over-year to 150.1 crore. And wow, profit after tax surging by 39.2% to 23.4 crore. Looking at the second quarter specifically, revenue held stable at 74.5 crore. The company noted a temporary moderation in sales, attributing it to adjustments for the GST 2.0 transition. Despite this, Q2 profits still grew by a healthy 9.7% year-over-year, reaching 12.6 crore. Let's dive into the Q2 numbers with these bar charts. On the top, Q2 revenue was 74.5 crore, nearly flat compared to 74.7 crore last year. On the bottom, Q2 operating EBITDA saw a slight dip to 18.1 crore from 18.4 crore in Q2 FY25. The first half story is one of clear growth. The bar chart on the top shows H1 revenue grew to 150.1 crore from 136.1 crore last year. Similarly, H1 operating EBITDA on the bottom increased to 33.8 crore from 31 crore. Profitability is where the company really shined. Impressive, the Q2 PAT seen on the top bar chart increased to 12.6 crore. The growth in the first half was even more significant, with H1 PAT on the bottom jumping to 23.4 crore from just 16.8 crore in the previous year. This KPI grid gives us a look at the margins. Q2 PAT margin improved nicely to 16.9%, up from 15.3% last year. For the full first half, the H1 PAT margin saw a major expansion, rising to 15.6% from 12.3% in H1 FY25. Finally, the company highlighted its strong financial position, reporting a healthy cash balance of 160.4 crore, as shown in the donut chart. This is after a dividend payout of 16.6 crore. Jagsonpal also announced it has strengthened its leadership team with a new COO and CFO. What's your analysis of this performance, especially with the GST transition impact? Let us know your thoughts in the comments below. Disclaimer: this update is for informational purposes only and is not a recommendation. Please do your own due diligence before making any investment decisions.